What is the perfect entry price for a stock you're interested in investing in? Personally, I think this whole perfect entry strategy is flawed and kind of stupid, and here's why. The best entry price for a high quality investment that you're thinking about holding for the next 10, 20, or 30 years is whatever the stock is trading at in that moment, today. This is especially true if you think there's long-term growth potential in the company. That's why you're buying it, right? Because you're bullish. You look at the company and go, wow, I think this company, whatever the company is, I think they're going to grow over the next 10, 20, 30 years. So why are you hoping that the stock drops a little just so you can buy it at a cheaper price if you want the stock to go up long-term? It doesn't make sense to me. I don't understand. I mean, I understand it to an extent, right? Especially in really volatile markets where a stock is extremely overvalued. Well, hey, what if I buy it today and it drops 20%? Or what if I wanted to buy it 2 months ago and then the stock has gone up 20%? Shouldn't I just wait for it to go back to the price that it was when I first saw the stock and I hesitated on buying? Yeah, that's what I'll do. Come on. This is not an investing strategy. I'll wait for it to go down so I can buy it cheaper because I want it to go up. If you've researched a company extensively and you're confident about their long-term growth potential, start. That's the key word. Start building a position. Buy a few shares, get your foot in the door, and then monitor things going forward. If the stock drops after you bought it, whether it's the next day or a month later, stop, read all the news, understand why the stock is dropping. Maybe it's something specific to that company or to that sector, or something that is totally unrelated, like something in the economy that is happening, some outside event that is impacting the market on a whole. First, understand why the stock is dropping, and then decide if it's a smart move to buy more or not buy more. If you decide to buy more, this is something that's called averaging down. But it's important to be really cautious here because averaging down can be really, really risky. On the one hand, if there's negative short-term news or something in the economy that's affecting the overall markets, that could, keyword, could be a great opportunity for you to average in, buy a little bit more, buy the dip, that sort of thing. On the other hand, if it is a speculative or very high-risk investment, you could be throwing good money into a bad investment, which you obviously wouldn't want to do. Now, if you're saying, hey, I don't know how to research stocks, don't worry, I got you, here's what you're going to do. All you have to do is go right here, click on the menu, which is right here, and you will get all of these resources. They're all free, by the way, but this is the one you want. There are videos there that walk you through the process on how to do fundamental analysis on a company you're interested in. For me, when it comes to starting a position in a company that I'm interested in, I don't wait. I just start buying. Maybe I buy 100 shares, and then if it drops, I buy another 25, maybe 50, depending. Here's an example. This is a stock that I bought in October, right here at around $105 per share. And it doesn't matter what it is. Don't worry about what the stock was. That's not the point of this video. And look where it ended up going. It ended up going all the way up to $134 before then dumping right back to around what I paid for it. So of course, it was up to $134. It dropped. I bought a little bit more on this dip. And look at where we are today. It went all the way from, I think I bought it at 110. It is now all the way up to 124 currently. I wasn't sitting there looking at that stock when it was $105 a month ago going, gee, it was in the 90s a week ago. Well, I'll wait for it to get back to that. It doesn't matter. I just bought. I started a position. I bought. It went up. It pulled back. I bought more. This is how I invest. This is what's right for me. If it's not right for you, try other methods. But for me, sitting and waiting for an entry price is a loser's game. You will trip over your own feet. If you wait and it does go to the price that you wanted, will you then buy it? Or will you chicken out and go, I don't know if I want to buy it here. Maybe it'll go lower. You know what I mean? Just start. Bulls make money. Bears make money. Pigs get slaughtered. And smart investors always smash that follow. Thanks for watching. See you later.